Trading in the Zone, Mark Douglas. Most traders do not fail because they lack skill. They fail because they cannot act on what they already know once real money is on the line. That gap is the whole subject of Mark Douglas's Trading in the Zone, one of the most influential books ever written on the psychology of trading. Core thesis: the technical edge that most people chase is roughly available to everyone. Charts, indicators, and patterns are not the hard part. The real edge is psychological, and it is the ability to execute a plan without fear, hope, or the need to be right getting in the way. Douglas has one central reframe: stop trying to be right on the individual trade and start managing a distribution of outcomes instead. As he puts it, we do not trade markets, we trade our beliefs about the market. Change the beliefs that drive your execution and the results follow. Leave them untouched, and no system on earth will save you, because you will keep overriding it at the worst possible moment. None of this is about effort or willpower. It is about identity. You have to feel like a trader who thinks in probabilities, not merely understand the idea on paper. The whole book is really about how to make that shift stick. The 5 fundamental truths. Douglas builds his whole method on 5 truths, and he wants you to feel them as instinct rather than memorize them as facts. The first is that anything can happen. However strong your read looks, the very next trade is genuinely uncertain. The second is that you do not need to know what happens next in order to make money, because an edge is a tilt in the odds and not a prediction. The third is that wins and losses fall in a random order across any run of trades. So even a setup that works 7 times out of 10 will still hand you a string of losers. The fourth is that an edge is nothing grander than a slightly better than even chance of one thing over another. And the fifth is that every moment in the market is truly unique, so the past can guide you, but it can never guarantee anything. Douglas's point is that traders nod along to all 5, and then they trade as though none of them were true. When a trade goes against you, the disciplined response is not that you should have seen it coming. It is that the trade was one ordinary sample from a method that wins over time, and your only job was to take the loss cleanly. The probabilistic mindset. Picture 2 traders holding the very same position. The first is watching every tick to see whether they are right, and the feeling of the trade rises and falls with the price. The second placed the trade as one bet in a long series, so a single outcome barely touches them. That second trader is operating from the probabilistic mindset, and it is the quiet difference between a gambler and a professional. They are not calmer because they care less. They are calmer because they have made peace with the fact that any one trade can lose and their edge will still pay them over the run. The shift from the first trader to the second is the real work. Without it, no system survives contact with your emotions, because you keep stepping into fixed trades that do not need fixing. With it, even modest edge compounds quietly in the background. One simple way to build it is to take a single defined setup and run it 30 times in exactly the same way, whatever happens, and let the distribution do the talking. Osiris Capital Trading Desk is built around this exact shift. The instant a position opens, it moves into management mode with you, setting fresh opinions aside and coaching only the plan you wrote in COM, the trail, the press, or the clean exit. So each trade stays one clean sample in the series. Risk acceptance. Underneath everything sits one demand that most traders skip. You cannot properly trade a method until you have genuinely accepted its losses in advance. Acceptance is a feeling, not a thought. It is the quiet sense that the next loss is normal, not a personal failure, and not a sign the system is broken. There is a simple test for it. Imagine the trade in front of you hits its stop. If that thought puts a knot in your stomach, you have not accepted the risk, and you are probably trading too big. The fix is not to grit your teeth and push through. The fix is to cut your size until the loss would barely register, and only then take the trade. Most people do the exact opposite. They size for the win they are dreaming about, try to tough out the downside, and eventually one bad run takes the account. So size the position for the loss, not for the profit. Before you click, ask one honest question. If this loses, will it genuinely not bother me? If the answer is no, the size is wrong. Osiris Desk holds this line as arithmetic rather than advice. It runs professional risk rules in real time, a strict cap on the risk in any single trade and a hard daily loss limit. And it checks the size on every position so the loss stays genuinely trivial, exactly as Douglas demands. Why the rules are hard to follow. Knowing a rule and following it while money is moving are two completely different skills. Douglas explains why the gap is so wide. Your mind makes instant associations. A loss today feels like the last painful loss rather than a fresh, independent event, and your body reacts before the thinking part of you catches up. Pain avoidance quietly runs the show as well. Once a trade has hurt you, you start ducking the next setup that looks like it, even when the odds are firmly in your favor. And the need to be right is wired and deep. Being wrong stings enough that traders close good positions early just to make the discomfort stop, for no reason the system would ever endorse. The market makes all of this worse because it is a perfect mirror. It quietly surfaces every weakness you have. It does not punish you on purpose. It simply hands you outcomes and then you punish yourself. The real contribution of the book is a way to change how trading actually feels, not just how you think about it. We trade our beliefs, that idea from the heart of the book, that you trade your beliefs rather than the market itself, has sharp practical consequences. Two traders can look at the identical chart and take opposite trades purely because of what each one believes about it. Your beliefs quietly decide what you even notice on the screen, which is why two people find confirmation of opposite views in the very same candles. They also decide whether you can pull the trigger at all, or whether fear freezes your hand on a setup you know is good. The lesson is almost uncomfortable. The work is not really on the chart. The work is on the trader. Most trading education sells indicators and patterns because that is what people are willing to buy, but the leverage was always on your side of the screen. The 5 common mistakes. Douglas sorts the classic trading errors into a handful of patterns, and each one maps cleanly onto a rule the professionals live by. The first is refusing to define your risk, entering a trade with no clear stop and only a vague plan to watch it. The answer is a hard stop on the platform, decided before you enter. The second is refusing to take the loss once that risk is hit, so instead you slide the stop, hope, and average down into a bigger hole. The answer is to be out the moment the reason for the trade is gone. The third is grabbing profits too early out of fear they will vanish, when the professional lets a winner run and even adds to it once the market has proven them right. The fourth is refusing to own the result, blaming the news, the broker, or bad luck when the one constant in every trade is you. And the fifth is failing to press a genuinely good position, leaving easy money on the table because a small win already felt safe. Every one of these mistakes leaves a fingerprint in a trade record, and Osiris Desk grades for all of them. It scores each closed trade on 5 axes. From the context read to the exit, the overall grade takes the worst axis, and hindsight is banned. The grade never asks whether the trade won. It only asks whether the plan was followed. Amateur mode versus professional mode. Douglas draws a hard line between the funded professional and the amateur. The professional runs one defined edge across thousands of trades, so no single result means very much. The amateur treats each trade as a personal event, which is why one oversized loss can erase a whole year of careful work. The move from one to the other has almost nothing to do with account size. It is about which mode you are in. Plenty of well-funded traders operate like amateurs and lose, and a few small traders operate like professionals and grind steadily higher. This is exactly why a funded account challenge can work so well. A daily loss limit forces you to size like a professional. A maximum drawdown forces you to accept risk like one. Pass the rules, and what you have really proven is that you can hold the discipline the book is teaching. The carnival booth. The most memorable picture in the book is the carnival booth. Imagine you run a booth at a fair, and every visitor pays the same fixed price to play. Some walk away with a prize and most do not, but you never sweat any single round, because the odds are tilted in the booth's favor and they pay out across the whole day. The point is that you are the booth, not the visitor. Every trade is just one more visitor stepping up to play your game. Some win and some lose, and your only job is to keep the game consistent and the odds intact. The moment you find yourself emotionally attached to one visitor, you have forgotten which side of the booth you are standing on. Reach for this picture whenever a single recent trade has its hooks in you. The two faces of fear. Douglas splits fear into two kinds that pull in opposite directions. Useful fear is plain respect for what the market can do to you. It is what makes you place a real stop, keep your size sane, and follow your own rules, and the trader who lasts carries it in the right amount. Destructive fear is the other kind. It is the fear of being wrong, of missing out, of looking foolish, or of giving back a profit you can already see, and it drives every mistake above. The skill is to turn one up and the other down. Ask yourself where your stop is and whether you have accounted for the risk in front of you, which feeds the useful fear. Then remind yourself that you are not missing out, that a setup is either on your plan or it is not, and that no single trade defines you, which starves the destructive kind. Bottom line, if you read only one psychology book before you start trading, make it this one. The probabilistic mindset, the 5 truths, and the idea of accepting risk in advance are the foundation that almost every serious approach is quietly built on. Understand that foundation first, and everything else in trading starts to fall into place far more easily. Lessons like these are what separate the professional from the crowd, because knowing a rule and living inside it under pressure are two entirely different achievements. Osiris Desk is built to close exactly that gap, an advanced platform for trader development and disciplined trade management, and the flagship of Osiris Capital. None of it stays theoretical, because Osiris Desk carries this book into the live session. It holds the probabilistic frame with you trade by trade, grading process over outcome, and coaching every position from entry to exit, until thinking in probabilities is simply how you trade.